Hello, this is Josh Belk with the Belk on Business podcast. Today we're going to pick up on what we started talking about last week in regards to some of the changes that we've seen in the IRS as a result of the Inflation Reduction Act, which was passed late last year. Last week we talked a lot about the enforcement side. Of course, the Inflation Reduction Act, there is quite a bit in it. Most of it was kind of more clean energy initiatives. Even the president came out this last week and kind of admitted that probably should not have been called the Inflation Reduction Act, as it wasn't an effort to reduce inflation, but essentially to try to push this clean energy agenda. But as part of this Inflation Reduction Act that was passed, provided just under $79 billion, so everybody's been kind of using that word, $80 billion, to be basic long-term funding for money to deploy to the IRS over the next 10 years or so. And so we talked last week a lot about the enforcement side, and this was the part that, if you follow it all, the kind of the political rhetoric as it related to this particular bill that's now a law that was passed, kind of made it sound like the IRS was going to be showing up at everybody's door and kind of this little bit of overreaching IRS. Now, unfortunately, as we talked about last week on the podcast, I'm going to encourage you to go back and listen if you're interested. But in that particular podcast, we talked quite a bit about what exactly was happening, so how that money was being utilized, and some of the areas of concern. And we're going to pick up on that a little bit today, but not on the enforcement side, but on the improvement side. So part of the funding was to be deployed to try to improve the technology. Now, a majority of the money was really used more on the enforcement side, but a lot of it was also delegated toward improving the relationship that the IRS has with taxpayers, improving their systems, their processes, their communication speed, et cetera. So there were a number of different initiatives that the IRS was given as it relates to problems or issues that relate primarily to technology and to communication with taxpayers. If you ever had to at all deal with the IRS, it is not always a fun experience. It's actually, from a customer experience end, it's been absolutely deplorable, and it has been for many years, and it's been especially bad over the last 3 to 4 years. And we know during the pandemic, they simply stopped communicating at all. A lot of paperwork didn't even get processed. Tons of mail was just sitting in trucks, and nothing was happening. And so it really provided a disservice to taxpayers. And although things have improved a little bit, they have a long way to go before there is an IRS in place that really, truly, the taxpayers feel comfortable working with and get problems resolved. So today we're going to talk a little bit about the areas of technology that the IRS is working on, and then also as it relates to the communication with taxpayers. And I'll provide maybe a couple little helps at the tail end of this, maybe a couple takeaways as it relates to what we have learned and what we now know as it relates to the Inflation Reduction Act, as it relates to the IRS and the experience that taxpayers have and the technology that the IRS is implementing. So first of all, these initiatives. So first of all, one of the initiatives is to improve the audit experience for taxpayers to allow for more correspondence types audits. And so to allow for a lot of just what normally when you think of an audit, and I think for a normal taxpayer, when you think of an audit, they think like the IRS is coming to their door, or they're going to have this long meeting where they have to bring all this paperwork in and sit down with an IRS agent, and they're going to, kind of crack the whip on you and put you in jail. Okay, so kind of this really bad type of unfortunately, kind of a paradigm that people have as it relates to the IRS. And for those of us in my profession that we work with the IRS on relatively frequent occasion, we know that this isn't always the case, okay? There isn't usually the case, with rare exception. So most of the time, things are kind of done through email. If there is an audit, most of it is correspondence, and then you have some that actually are in-person audits. And those are the ones that usually are kind of really make people nervous. But really what they're trying to do here is to really transition a lot of those smaller audits. So, of course, most of the emphasis on the audits are going to be it's supposed to be toward those making over $400,000 a year. From our experience, what we've seen even over the last year, that is not what's happening. The audits that are coming down have all been on smaller little Schedule C taxpayers, not on those making more money, but that just may be more out of randomness, not out of application as it relates to this particular bill. So, but what one of the initiatives is to improve that audit experience. So, those that might have a small Schedule C type business, something to that effect, just to allow for the information to be passed through email or through mail over the phone, and really for issues to be resolved with a singular point of contact. Many times these issues can be handled on a singular phone call. So, if they're going through and they're just simply just testing an audit just to make sure that everything's been prepared correctly or materially correctly. So that's the first initiative, to really try to transition more for smaller taxpayers, more correspondence audits, things being able to be handled through phone calls, through emails with a singular point of contact, and not have to feel like you're dealing with this big, huge, large government bureaucracy and trying to get your case resolved. So the IRS is also trying to implement a new case management system. And this is basically, if you've ever had an experience working with the IRS, it is very antiquated. The systems are old. It's very difficult to work with. Fortunately, what we have seen in recent days is more use of secure email, portals, things of that nature. So it has been better over the last, during the course of this year, has been materially improved as it relates to when we've had audits and had to deal with singular point of contact at the IRS to be able to communicate. So that actually, we have seen some improvement in that area. Okay, so first of all, it's improving the audit process for lower income taxpayers to be able to handle issues through correspondence or through phone and email with a singular point of contact. Secondly, improved system to allow taxpayers and their representatives to access their records. So it used to be trying to get a transcript and all this. It wasn't a horrible process, but it was very cumbersome and time consuming. So what they're trying to do is to improve technology and have technology out there to where taxpayers or representatives are able to log in, to pull the data, to be able to access the records more easily. Many times dealing with taxpayers, they don't know if they filed the return, what was filed, they don't know what tax forms they've received. Trying to pull data for third parties, do all this type of information has been cumbersome. And since the pandemic, for a while, it got much worse. And some of the policies that they had put in place had made it more difficult for even those of us who are tax professionals that work with the IRS. They made it even more difficult for us to be able to get taxpayer records and to be able to represent taxpayers efficiently. There has been some improvement in that area, but there is a long, long way to go. So there is one of the initiatives is an improved system to be able to pull that information, for there to be a little bit more transparency as it relates to what has been filed, what does the IRS have on file for this particular taxpayer, and what sort of adjustments have they made on the return on their end as well. Number three, using more and improved technology to move from paper to digital, and this is with both tax returns and correspondence. There are still a lot of tax forms that you're still not able to electronically file. For example, kind of going through with the employee retention credit, which is kind of a wave that's kind of taken over a lot of the marketing in the tax preparation space. And there is no process, for example, to file an amended 941, which is a quarterly payroll tax return. Okay, so they are going to be accepting those here in the next year or so, to where you can electronically file 941s, amended 941. It was just recently that you were able to file an amended regular 1040 return. And so, but what they're doing is trying to expand HOA returns, for example, not able to electronically file those. And so there's kind of a whole list of forms that you're still not able to electronically file. So they are working to where more and more forms can be electronically filed. Secondly, more handling digitally of correspondence. So right now, a lot of our correspondence is mail. So if you're a client of ours, you send over information. Many times I have to go through and I have to draft some sort of a letter, send it there, hope that they process it. Usually the client, the taxpayer, our client, will get 2, 3, 4 more pieces of correspondence before the IRS ever processes the correspondence. So if they get to a system in place to where they can handle a lot of this electronically, to where the correspondence can get to them electronically and they're able to respond back electronically, would go a long way to be able to help service taxpayers in a way that's a better experience for them, and to hopefully produce better results for the taxpayer, and also for the IRS as well, as far as on more accurately prepared returns and better resolution to any as it relates to any sort of conflict or question as it relates to the tax returns, or any sort of issues as it relates to the government and taxpayer relationship. Number 4, simplifying and speeding up the installment agreement process. So if you've ever been in a situation to where you've owed the IRS and you want to set up a payment arrangement, It used to be extremely difficult. You had a form you had to fill in. You had all this paperwork that had to go in. Now they've gotten to the process to where if you owe under $50,000, it's a streamlined process. You can go right online, fill out your paperwork. It's no questions asked. You pick out the timeline that you want to pay it, as long as it's under 6 years. And then you can set up for all automatic payments, and the process actually goes pretty well. But if you're over that amount, you have basically a PFS form. It's a type of a 433 form that has to be completed to get sent in, and it's a very cumbersome process. So what they're really trying to do is to simplify and speed up this particular process to where if a taxpayer owes and they're in a position to where they're willing to seek an installment agreement to make it easier for them to go and set up an installment agreement and to make sure that relationship with the IRS is one that is both helpful to the taxpayer and to the IRS itself in setting up these particular payment arrangements. So as a result, and these all sound like relatively good things, but here are some concerns. We touched on this a little bit last week, and in regard to what we've seen in some of the changes and maybe some questions, some issues that we just need to be aware of. First of all, the IRS hasn't, and there are no plans in working with professional organizations that are really in the business of working with taxpayers and seeking really kind of their help and their guidance. Usually when situations work best is when the government works with the private sector in developing solutions. And what we see usually in a situation where the government tries to act unilaterally without leaning into the private sector for help in certain areas, that usually the situation really becomes a disaster. The efficiency is, you don't see the efficiency that you're hoping for. The relationships don't improve. The government, of course, many times, unfortunately, they're more and more kind of this power grab. And so they just kind of build this thing out. What's best for the IRS, not necessarily what is best for the taxpayer. And so if they do implement this and they implement this well, it's really going to require kind of more of that relationship, that partnership with the government along with the private sector, because we're the ones working with taxpayers that really know where the true weaknesses are. And taxpayers many times aren't necessarily able to illustrate that, or many times they just simply hand over the correspondence to their tax professional, and then they're going to deal with the IRS, and they really aren't fully knowledgeable as far as every step in the process and what's going on and the pain points that we have in trying to resolve taxpayer issues with the IRS. So that's kind of the first concern, and hopefully that's something that fully implement these items that they really do lean into professional organizations that work with taxpayers day in and day out to find out what can really be done to help with that experience. Number two, with the improvement with more technology and more centralization of data, there hasn't been any clarity as far as what the IRS plans on doing as far as protecting the privacy of that data and then properly using that data. I talked about this last week. I think a really, really big concern, even politically, is the government having more and more information. And so in the centralization of that information. So how are they protecting that information? How are they going to use that information? Okay, are they going to use that information in nefarious ways, in ways that provide a disservice and a harm to taxpayers, and even those that may even from a question of constitutionality on whether or not these are things that should be done? Unfortunately, we as citizens have turned over a lot of our power willingly to the government here over these last few years, and so now the government is just simply they rarely ever return control when they take it. Okay, and so we kind of have to understand this is going to affect our tax policies as well. It gives them the power to be able to pull that information to find out what we're doing, how we're spending our money, where our money is at, and to have less barriers to be able to pull that information. And so because they are working for more centralization of data and really kind of stepping into the area of privacy that really does beg a lot of questions. Number three, proper recruitment and training of employees at the IRS level. So when it's kind of one of those things in our industry, I talked about this a little bit last week, it's becoming more and more difficult to find people. The profession, unfortunately, the accounting profession does not pay as well as a lot of other professions for the amount of education that it takes to get into that profession. Also, it's one that a lot of people don't want to do. Okay, it is not the most enjoyable for most people. Now, I love it, but most people don't want to do it, especially tax. A lot of people don't want to get into a career to where you're dealing with animosity day in and day out, which is essentially what you end up having to do when you work with the IRS if you're working with taxpayers. Nobody gets a smile on their face when their phone rings and they see IRS, or when they see Department of Treasury IRS on a piece of mail, okay, unless there happen to be a check in it. Okay, and so normally right off the bat, because it's a negative experience. And so nobody wants to really go into that. Now, if in the private sector we're having a difficult time finding people, the IRS is going to have even a more difficult time finding people. So that really begs the question: they're wanting to improve the enforcement, more enforcement. They're wanting to improve systems and processes, but how are they going about finding people, properly educating them on the tax code, and then kind of going through and then teaching them on this technology? I don't think this is going to be a problem that's going to be solved anytime soon, if at all. But it is one area we just need to be aware of. The IRS is going through, if they're going to be hiring a lot of people, understanding that most of these people are going to be inexperienced or have very little experience and have very little knowledge as it relates to what you may be dealing with, in particular, you as a taxpayer. And so just something that as a taxpayer, as a voter, you probably should be aware of. Number 4, will the system provide better transparency and communication with Congress, other government departments, and taxpayers? So is there, because right now it's kind of like it's really, really difficult. There's like, the IRS is almost, it's like the Wizard of Oz. Okay, they're like behind the curtain, and you just hear you see the smoke and hear the voice, but it's kind of like trying to get to the person, trying to deal with problems can be very, very difficult. So we truly don't know whether or not this implementation is truly going to improve the communication and improve transparency. And this is not just with taxpayers and the IRS, but with the IRS and Congress as well. And so getting the government bodies kind of fully know what's going on, understanding what the taxpayers are experiencing, improving those lines of communication, and as well as getting people in place that can do these things. Okay, it's a rather monumental task, and we'll just have to simply wait and see what actually happens with the implementation of this of the Inflation Reduction Act as it relates to the spend of this nearly $79 billion, and whether or not it does improve the situation at the IRS and with taxpayers and that relationship. So what are some things that we should consider? Kind of wrapping up this podcast. First of all, talked about this last week, and I'll do a little bit of a deeper dive here in the coming weeks. But your records, make sure you're keeping those. Keep everything on file. Understand how long you need to hold on to your paperwork, and just be prepared. If you end up having a situation where you have to deal with the IRS, use a tax professional that knows what they're doing. Get that representation. Usually the situations will be okay. So just make sure you're doing what you need to do on your end. One thing we do know is that there's going to be more government overreach, not less. Okay, and because of that, it is more probable, more possible that you are going to have to deal with the IRS at some point. So just make sure your ducks are in a row. Okay, and then if you do receive some sort of correspondence, act quickly. Don't just, if you receive something, it may be an audit, just maybe a question, it may be a modification on a return. Just don't know if the IRS and just stick it in a drawer. I've had situations through the years where people just had years of paperwork. They just walk into my office with a box, and it's amazing. Something if we would have called them a year ago, we would have addressed the issue a year ago, it could have gotten resolved. But they just get nervous, and all of a sudden, they get a levy on a bank account, or they're getting garnishment of their wages at work, whatever the case may be. You receive correspondence, just the IRS actually is not awful in working with in regards to setting up installment agreements. The states sometimes are difficult. I'm here in the state of Indiana. State of Indiana is very difficult to work with. Their Department of Revenue here they're horrible to work with. Okay, the IRS is actually a lot easier to work with, especially when setting up installment agreements. You owe some money, act quickly. Just get online, set up that installment agreement, or work with a tax professional in helping you to do it. If you have some sort of representation issue, just get it taken care of. Just don't ignore it. So first of all, make sure you're keeping your books and records. If you're a business owner, making sure that you hold on to everything. Keep all of your tax documents, all of your receipts, make sure they're properly documented. And if you do receive anything from the IRS, just act quickly. There's nothing to get nervous or scared about. Just one of those things that just understand that's just something that you probably are going to have to face, or you may end up having to face. And if you do, just turn it over to a competent tax professional, one that's knowledgeable in your area, and let them handle it for you. So this is Josh Belk with the Belk on Business podcast. If you haven't already subscribed, please consider subscribing. Have a wonderful day.